It's Friday, the 18th of December 2020. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines. The Australian economy ends the year in surprisingly good health with job levels surging. That's our main story. Plus, New South Wales records 17 cases of community transmitted COVID-19, triggering immediate border closures and fears of a large-scale outbreak. Transurban sells a stake in its US toll road business for almost $3 billion. And how much money do you need to be rich in Australia? The unemployment rate is falling faster than expected. Economic growth is better than anticipated, but Australia faces many years of large budget deficits. They're the key messages from the federal government's mid-year economic and fiscal outlook, better known as MyEFO, released yesterday. The report was released an hour after official labour force figures from the Bureau of Statistics showed 90,000 new jobs were created in November, mostly in full-time roles. The unemployment rate fell to 6.8% from 7%, surprising market economists. Federal Treasury now expects the unemployment rate to fall below 6% in 2022-23. Economic growth this financial year has been upgraded to 0.75% from minus 1.5% in the budget released in early October. The economy is tipped to expand by almost 5% in 2021-22. The budget deficit this year is forecast to be $214 billion and almost $500 billion across the next 4 years. Net debt will still peak at 42.5% of GDP in 2024. While high, it's not bad relative to some other Western economies. Federal Treasurer Josh Frydenberg said the numbers were encouraging, though the road ahead was still very challenging, and he made it clear that the government will continue to support the economy. All in all, yesterday was a good day for the government and business. The economy is rebounding. There are still challenges. Global growth outside China is stuttering. The relationship between Beijing and Canberra is poor. Getting the unemployment rate much lower will take time. But the economy heads into the Christmas New Year break in much better shape than anyone thought possible just a few months ago. Coronavirus outbreaks aside, 2021 looks promising. In overseas news, French President Emmanuel Macron has tested positive for COVID-19 and will self-isolate for 7 days. It's unclear how he contracted the virus. The European Union and China are close to signing an investment deal between the two regions, hoping to have it in place by the end of the year. It would open up access to the Chinese market for European companies. The New Zealand economy grew by 14% during the September quarter, taking the annual decline to 2.2%. It was the largest quarterly jump ever. And Bitcoin keeps going. The price of one unit of the cryptocurrency hit $23,000 overnight. Locally, New South Wales reported more community-transmitted COVID-19 infections yesterday, taking the number in the past 2 days to 17. There had been none in the previous 13 days. Authorities have asked everyone in the Northern Beaches area of Sydney to stay home for 3 days and for no one to travel in or out. They believe a super spreader could be the source of the outbreak. Transurban has done a deal to sell a 50% stake in its Transurban Chesapeake assets to Australian Super, the Canada Pension Plan Investment Board and UniSuper for $2.8 billion. It includes toll roads in the Greater Washington area in the United States. Chief Executive Scott Charlton said the money would be used for new opportunities emerging in North America. The A2 Milk Company, one of the darlings of the ASX until the middle of this year, has placed its shares in a trading halt. Investors are worried a downgrade in earnings guidance is on the way. 50% of A2 Milk's infant nutrition sales are to China, but the exit of the Daigou channel, basically foreign students who bought products in Australia and sent them back to their families in China, has hurt the company. The richest 10% of Australians own almost half of the country's private wealth. The next 30% own 38%, meaning the bottom 60% of the population have just 16% of household wealth. The data from the Australian Council of Social Services and the University of New South Wales says the average net worth of the richest 10% of people was $4.75 million, with property stocks and business assets being the primary investments of the group. The bottom 60% had average wealth of $277,000, mostly in property and superannuation. Consulting firm EY booked revenue of almost $850 million in the 5 months to November, up 10% on a year earlier, according to reports in the Australian Financial Review. That's about $425,000 in profit for each partner, up 35%. Zipco went to the market yesterday to raise $150 million to invest in the Buy Now, Pay Later Group's US expansion, its British business, and its local operations, particularly Zip Business, which is a partnership with Facebook to help small and medium-sized businesses. The capital raising was oversubscribed. Investors just can't seem to get enough of the Buy Now, Pay Later stocks. Afterpay, which enters the ASX 20 and ASX 50 next week, hit another record high yesterday, up 5% to $120.25. That's the Fear and Greed business headlines for today. There's more on all of these stories in today's full Fear and Greed podcast, as well as an interview with Hollywood talent manager Rob Masala. I'm Sean Aylmer. Enjoy your day.